Hello traders, welcome to new trading week. It's Tuesday, April 2nd, so new trading week, new month, new quarter. So hope everyone had a very nice extended weekend. As you know, some of traders have been away on Friday, some were away yesterday for Easter holidays. So we rescheduled the webinar for this Tuesday. So just let me know if everything is fine. Can you hear my voice? I will share my screen in a second. And of course, if you can see my my charts, my website. Oh, okay. Hey team, hey Enes, how are you guys? So what's going on? Well, we are seeing a pretty volatile markets. Let me just check something here. We are seeing pretty interesting volatile markets. As you know, stocks are moving to the downside, and the reason, of course, is most likely the US manufacturing PMI data released yesterday, when a lot of traders from the Europe were still away, so there were thin trading conditions, and that's why we are seeing these volatile moves. The S&P 500 and futures are currently trading to the downside. Of course, data came out above 50. I think it's the first time since November 2022. Please correct me if I'm wrong. So it looks like that economy is in an expansion, and if that's the case, then we know that inflation can be stickier to current levels, or maybe even can tick higher, and that's why maybe Fed potential cuts could be delayed, and this is what is driving this market at the moment. So we are seeing US dollar coming to the upside with the US yields. Stocks are also turning lower. The only thing that looks like a safe haven, at least right now, is gold, that is trading around the highs, but even this one could possibly be headed lower for a correction. So we will go through all of the charts, but before we go to that Elliott wave analysis, I want to bring attention to this Fed rates versus US manufacturing PMI, which I posted 2 weeks or 3 weeks back. And we have seen that there was always, when manufacturing PMI was in contraction, soon after the Fed followed with lower rates because they want to help the economy, right? But looking from 2022, this economy was in a contraction, especially for the last 12 months or so. But Fed rates are still pretty high. But now when this line in blue, okay, the PMI data came higher, of course, it means that that Fed could stick with the current rate. So because of inflation, obviously, which may not be easy to calm down if economy is doing well. So we will see how this will play out, but for now it looks like that we have a pretty serious dollar move, and especially the most volatile, at least now, a cash market open is also very volatile markets, as you can see on the S&P 500. So I will go to that as well. But before that, maybe it's not a bad idea to look at these correlations. Okay, what we are seeing still is that since Swiss National Bank cut the rates, that was on Thursday, I believe, March 21st. Okay, we can see that NOK, Kiwi, Aussie, Pound, Swiss franc, of course, these were the weakest. Okay, so if dollar uptrend will resume, then these are the one that could drop much further. On the opposite side of that, we have Mexican peso doing very well. So if suddenly we will see a risk on mode and stocks will stabilize, which maybe can happen just after some kind of a temporary recovery, that's when Mexican peso could stay in uptrend, because it's very strong even now when dollar is up across the board. Okay, the Mexican peso is doing very well. So generally speaking, commodity currencies, but not Mexican peso, okay, are in my opinion still weak, with euro, pound also not looking that great. So in my opinion, with current reaction to the downside on stocks, just be aware that there can be more dollar strength, and as a result we are also seeing when traders are moving out of stocks, out of risky sets, there are a lot of institutions that will also go out of ETFs on crypto, on Bitcoin, and this is what makes this drop on cryptocurrencies as well, when we are seeing stocks coming down in line with the strong US dollar. Looking at hello Martin, you asked Christian, how are you guys? So looking at firstly the US nodes, okay, so we are still seeing this deep correction playing out, so it still can be a temporary correction. As you know, if Fed cuts will be delayed, then this correction will be deeper, of course, but there's still speculations that they will cut sometime this year, maybe even before summer. Also, it will a lot depend what kind of a jobs data we will get out on Friday. Okay, so it will be very interesting to see if this trend of economic expansion, as discussed earlier, is going to match with jobs data or no. So I think that this will be another very important event to follow, but from an Elliott wave perspective, I think that we can be headed into this very attractive, very interesting support level at 61.8% to 78.6%. In Elliott wave terms, of course, an overlapping decline is normally represents a correction, because there is no clear, very strong one way of direction. Okay, it's completely opposite when you have an impulse, just one straight move, like here has been the case up from October of 2023. So I think that this is a correction. The 61.8% to 78.6% are definitely important level fib levels that could potentially limit this weakness. But for now, it looks like that we are still not there yet, especially because I also see that the dollar has possibly room for further upside. Okay, now if we let me just check my notes here. Now if we take a look on the S&P 500, now here's this breakdown point. We also covered and posted this one on Twitter as well. We said that probably moves out of a triangle represents the final leg within the impulsive sequence, so be aware of a reversal. And since market is now breaking this trend line quite aggressively, we are also falling back below wave 4, sub wave 4 termination level here. Well, this can trigger much deeper sell-off. I'm not sure if that will be some higher degree, wave B, wave 4, whatever, but it's really important that we could see this ABC pullback playing out. So if we see even 5 to 38 overlapped, then I think that there can be a deeper correction. So maybe even there can be some hedgers going on that will potentially try to push the prices even lower. Okay. Also keep an eye on VIX. We covered this one last time as well. We have seen a move towards the lower side of the range. Looks like that we are now already reversing here, so definitely, as you can see, VIX has plenty of room for more upside towards the upper side of the range, meaning that stocks are still trading far away from their supports. However, I also prepared another wave count here on the S&P 500, which is more like a short term, but still it also shows potential movement for the wave 4 pullback here, potential deeper prices. So even this one suggests, even if we are not, even if we are still in a wave 4 rather than we completed already higher degree wave 5, well, there is still room for a pullback back into this triangle pivot area. Okay, so I think that stocks could either stay sideways or even lower, but of course, as we will approach Thursday, Friday sessions, market will stabilize and will be very hard to predict unless until we get the jobs data out. Okay, but in Elliott wave terms, of course, stocks are still in uptrend. I just think that maybe this ABC correction on stocks could play out, especially as the recent moves from the US dollar suggest that there can be some movement by investors into cash. Now if we take a look on dollar index now, firstly, maybe the higher degree levels. I still think that this 78.6% is very important potential resistance around 106 or so. It also goes back to this March 2023. So after all, this can still be ABC movement here to the upside. Okay, so it can be a deep correction within a higher degree downtrend. Of course, another interpretation suggests, which is also very valid, if we break that 106 at 78.6%, then even this recovery can become impulsive, but still with potential bearish reversal later this month. So then this reversal to the downside would be delayed. Of course, it really depends how Fed will be aggressive on potential rate cut talks. Now, if we look maybe on the short-term picture for dollar index, notice that I'm tracking potential wave C, and since we touched these highs here, well, I think that wave C is already in play. And if we consider that wave C is a motive wave, then it means we should see 5 subwaves here. And for now, I still think that's not the case. Maybe some will say that, well, what if wave C will end right now here? Well, it's possible, but I'm not really sure if probable, because wave C is very rarely so short compared to wave A. Okay, so I just think that even if we see move back to the downside, back below 104 suddenly, I think that the dollar index will just stay sideways here for a longer period. So for now, I just think that it's important to be aware of potential more dollar strength when stocks are in a pullback mode. Looking at the euro, also still not at these February levels. This rise has been made by 3 waves, broken flag. So I think that there is room for market to resume towards 78.6%, 61.8% potential support before market may stabilize. But overall, I still think that the euro dollar on a bigger scale is headed higher. Okay, I just think that this correction could be a little bit long. It takes a little longer to unfold than I thought, but I still think that later this year euro dollar could be much higher, because here we clearly made an impulsive recovery away from 2022 lows. Now looking at ASI, now ASI is interesting, holding those supports quite well despite this dollar move that we have seen yesterday. But still, we cannot ignore the fact that the rise has been made by 3 waves here from February, and that bears are most likely still going to retest some lower levels. So I'm waiting for these lows to be taken out, and then maybe market could stabilize at the lower side of a very big trading range here, which could be some kind of a triangle. But I still think that, of course, it's not directional. We are not seeing any kind of a directional moves. I just think that we are trapped in this range here. But if we see 6-4 levels, that's when things could be quite interesting for potential bounces. Now, if we just a second. Okay, now let's take a look on dollar yen. So dollar yen is pretty stable here. Okay, it looks like that Japanese yen could see some strength if stocks come to the downside, but then on the other side of this coin you have US yields that are trading higher, so this could keep dollar yen supported, and that's why this pair is trading sideways. But I still think that there is room for another push to the upside. To 153 is potential upward projection that could come in play after this wave 4 consolidation is finished. It could be possibly a triangle. Now we have some trend line support, but if it's broken, then maybe watch out for deeper supports around 150.30 to 151, but still very attractive levels down there. Okay, also whenever this pair will complete this 5-wave recovery here, that's when I think that potential reversals should be interesting even on yen crosses. Okay, some of the yen crosses are already looking very weak. So with lower stocks, with right now, with very weak euro and pound versus US dollar, of course, we are seeing yen crosses in potential reversal zone mode as well. Okay, and if dollar yen would be another pair that would potentially see reversals, that's when euro yen could also see some very interesting and sharp drop. And so far what we are tracking here is 7 swing corrective recovery to new high, but notice that market did not held, okay, here above the previous swing high. So normally that's seen as a potential failure up here. Okay, so because we fell back into this back below the previous swing high, I just think that there is a chance that we are either going to stay sideways or possibly even experience higher degree correction, especially if stocks would really stay bearish here in the short term. If we break this trend line support, then watch out for lower prices here into wave C of 4, which could later on become triangle, maybe even a flat or something. But that's clearly a 7 swing corrective recovery with a failure break at the new highs, as I said. So that's why we should be aware of this potential limited upside. Later I also mentioned that Mexican peso is doing very well despite current dollar moves, and if we take a look on a higher degree charts, I still think that there is a plenty of room for more downside here by the end of the year. We recently broke this trend line support, which acted as a very nice resistance here 2 weeks back or so, and we are now in a new swing lower. However, going short here, I just think it's not the best idea. I think that after the next rally, it's much more appropriate to look for potential opportunities. Looking at the 4-hour time frame here, we had a pretty nice and extended leg in the middle. Okay, that's that trend line that was broken on the daily chart and acted as a resistance. But since we can count 5 waves down now, I think that the higher degree wave 3 can come to an end down here, and that we should be aware of this wave 4 rally. So very nice resistance would certainly be around 38.2%, which comes in at this triangle pivot area here of the smaller degree wave for around 16.75 or 80 area. So that whole area could be quite interesting for the next sell-off. What I really like so far is that we already see we are not, I will say it this way, we are not seeing impulsive characteristics from the lows so far. Okay, that's still only 3 waves, but since we are tracking higher degree wave 4, I'm just realized that this could take time before it will unfold. Either can be deeper correction, as I said, maybe towards 38.2%, or maybe even sideways. But in either case, I just think that this could unfold as a correction, and so far we already have some evidence that bulls are not that strong despite very strong dollar on other markets versus other currencies. Now let's take a look on crude oil. Crude oil is coming into potential resistance. I firstly thought that we will see potential top here around 83. I'll try it with shorts later on. I moved them a bit lower, but then I was stopped out on this rise to the upside. But I still think that there is a chance for potential limited upside. There were some reports that US is filling their reserves and they were buying crude oil, and that's why we are seeing higher energy prices. But I'm not really sure if we should trust this and look for potential impulsive continuation, because clearly we are moving into some very important and strong fib area here. But for a reversal, to call a reversal or even bearish moves, as you know, we should clearly see a drop back below $80 per barrel or so. So for now, I will just observe it from a distance here, and let's see if we can break even higher or maybe reverse lower. But for now, it looks like that, of course, higher energy maybe is linked, is happening because the economy could be in an expansion mode, and if that would really be the case, of course, there will be more demand for crude oil. Now let's take a look also on gold. So gold came even higher. Silver is lagging. It's not really breaking out yet. It's still, let me check. It holds that resistance for now, or going back to March 21st. So maybe that's still not a real bull run unless the silver also breaks to the upside. Now in Elliott wave terms, if that was a triangle, then we know that we are in a final leg here, and that we'll trust out of a triangle, and that we will see a new correction soon. Also, divergence on the RSI is here, and dollar is also strong. So I'm wondering, even US yields of course are diverging away from gold. So we will see if maybe dollar strength, if this one will resume, and stocks weakness, if maybe gold could also come to the downside. I still think that silver overall, it's very interesting for more upside, but I'm not sure that's really it. I was looking for potential $24 to be a very attractive, interesting support, and if we broke back below 25, that's the level that I would still observe for potential bounce later on. Okay, but for now I just think that if strong metal like gold is really at the end of this current short-term cycle, then obviously even silver, which so far is weaker, could see or pull back or stay sideways. Now let's take a look on some of the single stocks. Shane, can you look at Kiwi? Well, Kiwi is very similar to Aussie. We are also seeing their potential final leg to the downside in progress. However, I cannot share all of the charts and markets here because something has to be reserved for our premium service. Sorry about that. Okay, but maybe I will cover it next time. Now, let's take a look also on some of stocks. As always, we check some of the single stocks. Here is Apple. What we are looking at, still potential, very nice support down here. Pre-markets, as you can see, its market is sticking a little bit lower, of course, because major stock indexes are trading to the downside. 165 still very interesting area. If we can stop down there and maybe then rally in impulsive fashion, then I still think that bulls could play out here in the short term. But even if maybe I would make this wave count a little bit different, and this would be seen some kind of a first higher degree wave A of a deeper correction, even this one would suggest that we will see some recovery in the near future away from that support, which still in my opinion has to be retested first. If we take a look on Tesla, as you know, Tesla has experienced a very interesting and quite deep pullback here. It's actually now on a higher degree charts, it's sideways because electric vehicles, as you know, are not doing that well. But looking maybe at the technicals here for Tesla, I still think that there's a very attractive, interesting support around 140 to 150, which could come in play this week in pre-markets. As you can see, we are already trading lower. Potential wedge formation, maybe that's possible. But what I'm looking for 140 is a potential support that goes back to January of 2023. So there were that's when earnings for 2022 were released, and as you can see, there was a small gap, very nice support a few months later, and we are now back down here. Okay, and because we have potential wedge, this could telling us that maybe we are really in late stages of the current drop. But the whole cycle here, okay, is still, or this correction is still somehow incomplete. Okay, even if we hold these levels, it's still, stock will just stay sideways here, trapped in a range. Now let's take a look on AMD here, and you can see that we are still in the middle of correction in my opinion. So wave 4 could be a little bit deeper, maybe will be a sharp free wave correction, because this wave 2 somehow was a little bit more complex. Easily you can count this in 7 swings because of plenty of overlaps. So maybe this wave 4 higher degree will see a rule of alternation, meaning that wave 4 is different compared to wave 2 with the structure. Here this one was more like a sideways, so this one could be more like a deep correction. Okay, so 50% is definitely possible, but what's important that even if we are going to see deeper prices, that for now is still only first leg of this free wave drop. So watch out and be aware for potential more weakness. Even if we look at nvidia, where it is, actually I posted some chart of nvidia last week. We said that we are seeing possibly nvidia still in a correction. Okay, notice that market, after some support was found in mid-March, market was not able to recover or break to a new high here. So clearly that's ongoing corrective wave 4. I'm not sure if wave 4 will be more sideways or deeper for an ABC, but that's definitely very nice and attractive support. First one around 800 or so, and then you have even lower gap here that goes back to February. As you know, big strong earnings when whole market, stock market, moved to the upside in February. That's the second support around 700. So if this correction is still ongoing, that's maybe also going to be, let me take a look. Oh no, wait. Okay, so maybe this pullback could also, on nvidia, deeper corrective wave 4 can also keep cryptos in sideways consolidation here for a potential deeper wave 4. I talked about this last time. And also, if we look now at the crypto total market cap, you can clearly see that we have a very strong, very sharp decline so far, while the US dollar is coming to the upside. So I'm thinking about more complex wave 4, can be a little bit deeper, that will retest these levels, goes back to mid-March, or maybe can stay sideways. Watch out here on Bitcoin futures. Watch out this gap that goes back to Sunday, March 24th. Okay, so when this gap is filled, if we'll see market that we hold and maybe reverse to the upside, then Bitcoin could be in a triangle. Okay, but if this gap will be broken and the dollar index will just keep moving to the upside, well, then I think that that Bitcoin will see much deeper correction. Here, looking at the updated wave count, so as I said, possibly a triangle if this support here will hold, that goes back to 64,000 or so. So we are pretty close here on spot, but if this one is broken, then maybe this decline can even become impulsive down from March 27th. Okay, why? Because we know that in a flat, wave C is made by 5 waves. So you will have 3 waves for a wave A. Let me just add this here. So you will have 3 waves for wave A, 3 waves for wave B, and then a 5-wave drop for a wave C for a potential flat. In such case, the supports is at this wave A termination levels around 60,000. That's also this spike here from a previous 4th wave. So very strong support is definitely this one, maybe much stronger than the current one. But we'll see how the market will act and respond in the next few days. I think that this is now definitely the first support, but much deeper and maybe even more important can be a little bit lower. Okay, but what's important is that in both cases, flat or a triangle, this is a correction, because the first leg has been made by 3 waves, and you cannot say that that's a top in place if you have 3 wave drop from the high. Okay, it belongs to a complex correction. Okay, but of course it looks like that this further rise on Bitcoin will be delayed, maybe till halving, which is planned, I think, on April 19 or so. So we'll see how market will trade till then, but I think that lower it goes, much more interesting could be for a bounce after halving. Okay, traders, I hope that you enjoyed this presentation. I welcome you to check, for if you're not our member yet, to check maybe our services here at wavetraders.com. We cover plenty of those markets on a daily basis in our premium services and our chat rooms. and also other markets as well. So if you're looking for more analysis, make sure to visit us. If not, just keep an eye on these free charts, blog posts, or follow us on Twitter. Okay, traders, good luck this week and talk to you soon.